On the feed grains, we have Scott Gecas. He's with Walsh Trading. All right, we'll start with the corn and soybeans. Why so much pressure right there?
Yeah, it's really surprising that you're seeing this much pressure coming into the grain market. You know, with soybeans, just in particular, we had a decent export sales. We had about 1.97. Out of that, China bought about 1.7 of it. So China's still committed to buying more U.S. grains. Whether or not this Chinese trade war talk is going to actually materialize, they put a percentage, about 90%, that it's already in play. They're just working out the final details and the wording on that. How fast that's going to materialize, nobody really knows, whether it even does. You know, it's this soap opera, the saga continues. You see both sides going back and forth with the headlines. So we're going to wait and see how that really is going to be coming into play. But, you know, with the heavy rains coming in for the next few days in the Midwest, I mean, that could be, you know, something that is putting a little bit of pressure on more than normal. So we're going to see how this is going to play out for the rest of the, you know, next few days.
You beat me to it. That's exactly the point I was going to ask you about with that weather forecast the way it is. Are the funds still holding those huge net short positions even with that storm moving in?
Yeah, well, coming in today, we were looking at numbers of around maybe 13,000 to 19,000 of short covering, you know, just from yesterday to today. So with the move lower, it doesn't really seem like that short covering is really taking effect. It looks like they're actually adding to their shorts rather than taking it off. But we're going to see how that open interest is going to play out at the end of the day.
Okay, and I just saw a weather update here, too, from South America. It sounds like things are going well down there with harvest. What about the wheat? Now, in the wheat, we've had pressure there today as well. On Chicago wheat and Kansas City wheat, we've been lower. Chicago May down 3 1/4. And Kansas City wheat, we've been lower there. We're down 6 at 433 1/2. Even the spring wheat trade in Minneapolis has May down 5 at 522 1/4. With that weather you were talking about, Scott, how is that the wheat markets are weaker here?
Yeah, well, with the wheat market in general, that's the one that stands out with all the grains to me. And the reason why is because if you look at the option flow and the overall volume, you know, the option skew, it's to the downside, where corn and soybeans, you're going to pay a little bit more for upside calls. But for the wheat market in particular, you're seeing a bit of downside pressure. Just on the open, we've seen about 450 of the 460, 440 put spreads trade about 450 times. So that just confirms that there's a little bit more downside skew. People are willing to pay a little bit more for the puts. So that leads me to believe that there's a little bit more room to run to the downside in wheat.
Okay, don't go anywhere. We'll come back and we'll take a look at the cattle and hog markets. No shortage of stuff to talk about there, and we'll do that when we return after this. We go back to Scott Gecas of Walsh Trading in Chicago, who joins us to take a look at all this. Boy, just wicked swings in the hog trade today, and I guess that could be expected that way, just because we're in expanded limit mode here. But why the weakness in the cattle market? Have you heard?
The cattle market in general, I was on earlier this week talking about the very light volume. So when you see very light volume and you see a big surge of volume coming in, it's going to move the market one way or the other. So Wednesday, we seen that very big spike lower. As soon as it broke that 125 level, it had a big continuation. But in general, the volume just isn't there. It's just not there at all. So the option volume is extremely light. You're seeing single-digit option flow. It's really not that big. The volatility is kind of still staying a little bit high, but the skew is pretty much relatively flat. You're going to pay the same amount for calls as you are for downside puts. So right now, we just need a little bit more confirmation. You know, the rumor is that China will start buying U.S. beef, which is out of the ordinary, but we need something to come in to support the cattle prices. Until then, we're just purely watching technicals as well as the volume, moving it one way or the other.
Excellent stuff. Thank you, Scott, for talking with us. Scott Gecas of Walsh Trading in Chicago, right there at the edge of the trading floor.